What I know about your business is that you have basically outdoor shopping centers, often anchored by grocery stores. And that is a lure of foot traffic. People have been cooking in more, not eating out as much. Is that one of the reasons why you've been able to keep occupancy up and rents up?
Yeah, that's exactly right, Tyler. We really benefited from three different things really in the past year. First and foremost, the suburbanization, right? Kimco owns grocery anchored properties really in that first ring suburb around the top 20 major metropolitan markets. And so that suburbanization really helped us as we had that property in that first ring. And then second, obviously work from home. A lot of people are still working from home. We have a snow day here, so I'm working from home today. But we obviously have a lot of people shopping in their local grocery store, eating at home, cooking more often. And then the third, probably most important takeaway is that the store is being used as a logistics hub. So distribution, fulfillment, it's all about convenience and optionality right now for consumers. And that's really what the grocery anchored shopping center is affording the consumer, is they're able to elect how they want to shop, whether it's buy online, curbside pickup, you name it. And it seems like that's the playbook, even with the variant today, that people are following, as our traffic for December was actually higher in 2021 than it was in 2019.
Connor, it's Kelly here. What are you going to do about interest rates this year, to the extent that they could dampen the stock or just pose a challenge in general to some of your investment opportunities?
Yeah, it's something obviously we're watching closely. We're very fortunate at Kimco. We actually have some refinancing opportunities that have some higher rates burning off that we can refinance at lower coupons, which will help our earnings growth going forward in 22. But it's something that we're watching closely. I mean, it's not something that we can control. So I always say focus on what you can control. And real estate typically is used as an inflation hedge. And at Kimco, we're very fortunate that our anchor leases are actually 50% below market. So when you get that mark-to-market opportunity, and typically on the lease durations when they expire is when you get that optionality. And that's why we think we really have some nice earnings growth going forward.
What are your three largest customers, Connor? Which stores or chains, number one? And number two, take us through a couple of comparative numbers on occupancy and today versus the peak in 2019.
Yeah, so our top three largest anchor tenants really would be TJ Maxx, Home Depot, and then Albertsons. And so when you think of a grocery anchored shopping center, we typically have an Albertsons or a Safeway, depending on where you are. It could be a Publix in Florida, an H-E-B in Texas. It could be a Trader Joe's or a Whole Foods if you're in the Northeast. So that's really sort of the heartbeat of the shopping center. And then we try and have a merchandising mix that really enhances the traffic flow throughout the day. So your favorite coffee place, your favorite bagel place in the morning. Groceries typically are the heartbeat because they drive trips to the center, usually 3 to almost 5 times a week. And then you have that treasure hunter, that TJ Maxx or Home Goods, that people love to go in and see what they have on special offer. And home improvement obviously has been doing quite well as well. So that's the merchandising mix that we have alongside small shops that really enhance sort of the local feel of the shopping center. You don't want everything to be cookie cutter. You want it to connect with your local community, and you want it to have that sense of community when you come to the shopping center. And so typically that's what we try and do, is find that special sauce of someone that's local in the community. And we've seen the rebound in occupancy. This in 2021, sequentially, we saw occupancy pick up quarter over quarter. And what's fascinating to think about in 21, 7,900 new stores opened in 2021 and only 4,600 closed. And I think that's a dramatic shift as this last mile retail has become the priority for retailers to really invest in going forward.
How close is your occupancy quickly to the peak occupancy? Is it a couple of percentage points?
We still have about 200 basis points to go, but the nice part is the momentum's building. We've signed a lot of leases over the 5-year average in the past year. And so we've got close to $50 million of NOI coming online in 22. That's signed, but not yet cash flowing. So we've got some nice visibility into our growth.
Interesting. So just 2% lower than it was at the peak. Connor, great to see you. Happy New Year, my friend.